Hello, fellow investors. I'm Ben, and this is GVD Investing, where I break down the latest stock market news, analyze stocks, and share my personal investment journey in hopes of making us all better investors.
In this video, we'll take a look at what is going on with jackma, the political situation between the US and China, the risk of Chinese companies being delisted, the antitrust investigation by the Chinese government, and what I think about investing in Alibaba. Time is a valuable thing, so I won't waste yours. Let's get to it. Well then, welcome back. I hope you all are having a better start to 2021 than Jack Ma. Fortunately, he's not missing. Much like Kim Jong-un wasn't dead, or never was. One thing I've learned in my 30 plus years of being alive is that the American media loves to talk trash about communist countries. That's not to say there aren't some serious issues with the CCP, but I think a lot of it is largely overblown. So, as a Canadian, I'm essentially a neutral third party in all of this, I figured it'd be a good time to take a step back, relax, and look at what's actually going on behind the media frenzy. As many of you likely know, it's been a rough couple months for Alibaba stock. It all started back in early November with the news of the blocked Ant Group IPO by the Chinese government. It sent the stock plummeting about just under 20% in the course of 2 weeks. And then over the next 6 weeks, it jumped up a bit, but overall sat relatively stagnant. I don't think it moved much from the middle of November to Christmas Eve. Basically sat exactly even. Despite the news coming out in mid-December that the US might delist some Chinese companies from American stock exchanges. And then on Christmas Eve, the news came out of the antitrust investigation from the CCP, and that sent the stock plummeting once again, another 13%. So overall, from their peak in October 27th to the bottom just after Christmas Eve, well, bottom so far anyway, it fell 30%, and then it rebounded a little bit until just after New Year's, and the news came out of Jack Ma going missing, and the stock tanked again. So it's been a really rough 2 months for Alibaba stock. So let's work ourselves backwards from the most recent events of Jack Ma going missing to the antitrust allegations by the CCP, to the risk of being delisted from American stock exchanges, and then finally to the blocked Ant Group IPO, and see what that means for the Alibaba stock going forward, and what overall I think it just means for the company and other Chinese investments as well, not just Alibaba. So what the heck is going on with Jack Ma? Is he missing? Is he laying low? Well, this might sound kind of harsh, but guess what? It doesn't matter. Many of you may not know this, but Jack Ma doesn't have much to do with Alibaba anymore. He hasn't been CEO since 2013 or on the board since 2019. He stepped down / retired long before all of this media attention. Daniel Zhang is the CEO and executive chairman and has been for a while. Whatever happens with Jack Ma at this point has very little effect on Alibaba. Ant Group is the bigger risk to the CCP, which Alibaba does own 30% of, but Ma doesn't have any direct connection to Alibaba anymore. This would be like the US government going after Bill Gates at this point, and Microsoft tanking as a result. The two are completely non-related. This simply doesn't make any sense. The stock tanking because Jack was apparently missing has absolutely no impact on Alibaba's business. Nothing more than American media hype trying to negatively affect a Chinese company. Now that we have that all cleared up, we should take a look at the antitrust investigation of Alibaba by the Chinese government. The American media has done a great job of using these probes as some sort of affirmation that the Chinese government, and more specifically, a communist government, is drastically abusing their power. Really, America? That's a bit hypocritical. Antitrust probes happen in the US too, as we are currently witnessing with big tech companies, Google, Facebook, Apple, Amazon. Microsoft has also faced many antitrust lawsuits over the years. It's not just China that has antitrust concerns. As tech gets bigger and controls more and more important data, this is going to be an issue in every country. China investigating their tech giants is no different than America doing the same. Does this mean you shouldn't invest in Apple, Amazon, Google, or Facebook? Stop being played by the media. I hate to do this to you, but we need to talk politics for a sec. Let's look at this from another perspective. Is investing in China any riskier than investing in America right now? Hear me out. As a Canadian, should I avoid investing in American companies because for the last 4 years they've had a delusional, racist, volatile president that is capable of crashing the stock market with a 3 a.m. tweet he types out while sitting on the shitter? This has happened multiple times over the course of 2020. Should I invest in businesses operating in a country led by a guy that has gone bankrupt more times than Tom Brady has won the Super Bowl? If going bankrupt was a sport, Trump would be the GOAT. A country led by a guy that suggested injecting bleach to cure a virus? The point is, all countries have varying degrees of political issues, many with inept and corrupt leadership. The stock market and the economy will exist regardless of who is in charge. I'm not investing in politics. China is no different. Just because they are communist doesn't mean Alibaba can't succeed as a business, as they have been. Communist actually benefits Alibaba and eliminates their need to compete with foreign companies in China. Google, Facebook, YouTube, and Amazon aren't allowed to operate in China, which leaves the market wide open for Chinese companies to monopolize. Furthermore, Trump only has a couple of weeks left. He's just trying to make as much of a mess as he possibly can before he leaves. Like a disgruntled employee that already gave his 2 weeks notice but wants to create a scene before he leaves. He'll be gone in 2 weeks, whether he likes it or not. That said, he's certainly doing a good job of creating as much of a mess as he could before he leaves. Which brings us to our next point, the risk of Chinese companies being delisted from American stock exchanges. The risk of Chinese companies being delisted is nothing more than the Republicans trying to incite more tension between the US and China. They've been working on it for the last 4 years. Whether it's the trade war, ridiculous tariffs, or calling the pandemic the China virus, the current administration has consistently been going at China. This is just dumb. Delisting Chinese companies would hurt American investors just as much as it would hurt those companies. Billions of American dollars are invested in Chinese companies. Furthermore, the concept that all Chinese companies are fraudulent and don't report their numbers correctly is ridiculous. Yeah, sure, you'll get the odd Luckin Coffee every once in a while, but you get that in the US too. Nikola, Enron, Theranos. As long as Chinese companies abide by the same auditing regulations as American corporations, there is no issue. Alibaba, Neo, Tencent, Baidu, and many of the other huge Chinese companies are audited by accredited accounting firms, which meets government requirements. This is nothing more than Trump's last futile attempt of showing his political strength while further pissing off China. Alright, well, what does that leave us with? I guess the only thing we haven't really talked about is the failed Ant Group IPO that sent the Alibaba stock absolutely plummeting and got everyone talking about Alibaba and the risk of investing in Chinese companies. Though this makes a bit more sense than the other issues we have just gone over, it doesn't make a lot more sense. First, just because the IPO didn't happen as planned doesn't mean that it never will. Delays happen. Changes will likely have to be made, but at some point, I expect Ant Group will go public. Second, Alibaba's ownership of the company and the revenue it generates hasn't changed. Baba still owns 33% of Ant Group, while Jackma owns roughly 9%. This is really the only connection between Alibaba and Jackma at this point. Moving on, Alibaba was still able to generate $752 million in investment profits, or 4% of its net income in 2020 from their stake in Ant Group, followed by another $1.12 billion, or 10% of net income in the first 2 quarters of fiscal 2021. So even though the IPO didn't happen, Alibaba still pulled in their profits as expected. The only thing that changed was that Alibaba didn't get the extra profit from the Ant Group IPO. Does that really warrant a 20% decline in the stock price? Personally, I don't think so. If you really look at it, nothing fundamentally has really changed. This is the kind of news that Warren Buffett loves. News that drives the price of a stock down while very little has changed fundamentally for the business. Jack Ma has virtually nothing to do with Alibaba at this point, so whatever happens to him has very little effect on the company. Alibaba's market opportunity hasn't changed, nor has their ownership of Ant Group. The political tension between the US and China is likely to subside over the coming months after Biden takes office, and the antitrust trials are normal for such large corporations, just as they are for tech giants in the US. Alibaba isn't going anywhere. If you are invested, don't panic sell. I would definitely hold on and add more to bring your cost basis down, but that's just my opinion. If you're starting a new position, as I have been over the past couple weeks, I suggest dollar cost averaging in slowly because we never know where the bottom will be. If you think you can time the bottom, all the power to you. Good luck. I hate making predictions, but I have a feeling that most beat-down Chinese stocks will rebound quickly once the new administration takes over and things settle down. I could be horribly wrong on this one, but I feel comfortable investing in credible Chinese companies and think that for the most part, people just need to relax and look at the facts. Don't just take my word for it. 47 analysts have looked at this stock, and it has an average price target of $335.69 and a high target of $393 per share. I think this is a rare opportunity to get in on one of the world's largest companies in the most populated country with a rapidly growing economy while it's significantly on sale. Don't let media sway your investing decisions, as hard as that can be sometimes. So I think that's a wrap, ladies and gents. If you've made it this far, thank you so much for sticking with me this whole time. Please tickle that like button. And if you want to follow the journey and be notified of future videos, please smush that subscribe button. Thank you very much. Until next time, be safe, wear a mask, and invest wisely.